What if I told you that you only need one candle to find profitable trades every single day? No complicated indicators, no expensive software, just one candle and 3 simple rules. The best part is this works on stocks, crypto, and even forex. By the end of this video, you'll have a complete system you can start using today. So stay with me because this one is going to change the way you trade. Most trading strategies fail because they're overcomplicated. Too many indicators, too many conditions, too many ways to second guess yourself. This strategy bypasses all of that. It's built around something called the 4-hour range candle. We use one single 4-hour candle to create a roadmap for the entire trading day. Then drop down to a 5-minute chart to find precise entry and exit points. Clean, simple, and repeatable. This entire strategy runs on a 3-step checklist. Follow these 3 steps in order and the setup either appears or it doesn't. No guessing, no emotions, just rules. At the start of each trading day, pull up any stock, crypto, or forex pair you want to trade on the 4-hour time frame. One important thing here, make sure your time zone is set to New York time. This keeps everything aligned with market hours. Once that's done, find the very first 4-hour candle that formed that day and draw a line at its high and another at its low. Extend both lines across the rest of the day. That's your range. Just make sure the candle has fully closed before you mark anything. If it's still forming, wait. Getting that wrong from the start will throw off everything that comes after. Now switch down to the 5-minute chart. This is where the actual setups happen, and this step is where most traders would miss an entry completely if they don't know what to look for. Watch for a 5-minute candle that closes completely outside your range, either above the high or below the low. Wicks don't count. The candle body needs to fully close outside of the range. This is important, but you still don't enter yet. You wait for price to come back inside the range and close within it again. That sequence, breakout, then re-entry, that's your signal. And when it lines up, step 3 is where you take action. One thing to keep in mind, all of this has to happen within the same trading day as the range you marked. If price breaks out but never comes back in by the end of the day, there's no trade. You start fresh tomorrow. So let's say price broke above the range high on a 5-minute candle, then closed back inside. That's a short signal. You're planning to fade the breakout. The moment that candle closes back inside the range, that's your entry. Your stop loss goes at the exact high of the breakout candle. And for take profit, we're targeting 2 times our risk. So if your stop is $1 away, your target is $2 away. Same thing works in reverse. If price breaks below the range low, then closes back inside, that's a long signal, a signal to buy. Stop loss goes at the low of the breakout candle. Take profit at 2 times your risk. Now here's something important that most people overlook. Sometimes the breakout candle is massive, meaning if you placed your stop at the exact high or low, the risk would be too large. In those cases, look for the nearest key level and place your stop loss there instead. The take profit always stays at 2 times whatever the risk is. This is important to keep your winners bigger than your losers. And as long as you're still within the same trading day, you can take multiple setups if they appear. Okay, so let's jump on the charts and see what this looks like in practice. Alright, so I'm going to walk you through exactly how to set this up using real charts. I'm using TradingView for this, and honestly their charts are super clean and make marking these levels incredibly easy. If you want to try it out, there's a link in the description where you can get a $15 reward just for signing up through my link. So first things first, before we do anything, we need to make sure our time zone is set correctly. Head to the bottom right corner of your chart and set the time zone to New York. This is crucial because we want everything aligned with market hours. Without this, your first 4-hour candle of the day won't be accurate and the whole setup falls apart. So we're looking at Bitcoin on the 4-hour chart. What we're looking for is the very first 4-hour candle that formed today. Right here, this is it. This candle represents the first 4 hours of today's trading session. Once we've identified that candle, setting up the range is simple. We take the high of this candle right here at the top and we draw a horizontal line across. That's our range high. Then we take the low of the same candle down here and draw another line. That's our range low. Simple. Those two lines create our 4-hour range for the entire day. Everything we do from here is based on these two lines. Super straightforward, but we need to make sure we get this right. Now we switch down to the 5-minute time frame. You'll notice those same range lines carry over to this chart. We can see price moving in and out of the range on a much more detailed level now. This is where we look for our actual trade setups. Remember the rules? We need a 5-minute candle to close completely outside of the range, and then we need price to come back inside the range and close within the range again. When both of these things happen, we've got a valid setup. Let me show you how the entries work before we jump into the actual trades. When we get a valid setup, the entry is always at the close of the first candle that re-enters the range. So if price breaks above the range high and then the candle closes back inside, that close is where we enter short. If price breaks below the range low and then closes back inside, that's where we enter long. The stop loss goes at the high of the breakout candle if we're shorting, or at the low of the breakout candle if we're going long. And the take profit is always set at 2 times our risk. So if our stop is $1 away, our target is $2 away. This 2-to-1 risk to reward ratio is what makes this strategy profitable over time, even when we have losing trades. Now let me show you 4 real trade examples so you can see exactly how this plays out. Okay, so first example, price breaks above the range high right here. The candle closes completely outside. Then we get this candle that closes back inside the range. That's our short signal. Entry is at the close of this candle. Stop loss goes here at the high of the breakout, and our take profit is set at 2 times that distance down here. Now watch what happens. Price starts moving up instead of down. It pushes higher and eventually hits our stop loss. Trade close for a loss. That's a 1-hour loss. Let me be honest with you, this is going to happen. Not every trade wins, but here's the key. Because we're always targeting 2 times our risk, our winners are always bigger than our losers. This was mentioned before. So even if we lose a few trades, the winners more than make up for it. You'll see exactly what I mean when we look at the 4 trades together at the end. So let's move to our second example. Price breaks above the range high again, but notice how strong this breakout is. Price shot up way beyond the range. If we placed our stop loss at the exact high up here of this breakout candle, the risk would be massive, way too big for a smart trade. Instead, we look for the nearest key level. In this case, there's a recent resistance zone right here. We place our stop loss just above that level instead. This keeps our risk manageable while still following the setup. Price comes back inside the range. There's our entry right here. Stop at the key level, take profit at 2 times our risk. And look at this. Price drops hard and it hits our take profit perfectly. That's a clean 2-hour winner. We risked 1 unit to make 2 units. This is exactly what we want to see. Okay, so now moving into our third example. Now this one's interesting. Because the breakout is tiny, price barely breaks above the range high. Just a small push outside, as we can see right here. But here's the thing, it still satisfies our rules. The candle closed completely outside the range and then price came back inside. That makes it a valid setup, even though the breakout wasn't dramatic. Because the breakout was so small, we can actually use the same key level from the previous trade for our stop loss. There's no need to place it way up at the high of this candle when we've got a solid key level right here that makes more sense. Our entry is always at the re-entry candle. Stop at the key level, take profit at 2 times our risk. Price drops again and hits the target. Another 2-hour winner. 2 wins in a row now. Okay, now our last example, and this time it's a long trade. Price breaks below the range. The candle closes completely under the range. Then we get a candle that closes back inside. That's our long signal. Entry is at the close of this candle right here. Stop loss goes here at the low of the breakout candle. Our take profit is set at 2 times our risk right up here. Watch this price action. Price starts climbing, it pushes higher, stays above our entry, and eventually hits our take profit level. Another 2-hour winner. So let's look at what just happened across these 4 trades. We had 1 loss, that first trade that cost us 1 hour, but then we had 3 wins, each one giving us 2 hours. We lost 1 unit, but made 6 units. That's a total gain of 5 hours across just 4 trades. This is exactly why the 2-to-1 risk to reward ratio is so powerful. Even with a losing trade right at the start, we still walked away profitable. As long as you're winning more than 33% of your trades with this setup, you're making money. And from what I've seen, this strategy wins way more than that. Now, I want to be honest with you. This is just the bare bones version of this strategy. We didn't add any filters, any confirmations, no extra indicators, anything. This is just the pure 4-hour range setup. At the end of this video, I'm going to show you one specific indicator that you can pair with this strategy to filter out a lot of these losing trades. When you combine the two, the win rate jumps from about a 67% win rate, which is good, to an 88% win rate, which is excellent. So make sure you stick around for that because it's a game changer. Alright, now let's look at how this plays out on a forex pair. I've got the 4-hour range already marked here on Euro USD. Now early in the session, there was a setup that appeared right here. Price broke the range and came back inside. Technically, this is a valid setup, but I didn't take it. Why? Because the indicator I mentioned earlier, the one I'm going to show you at the end of this video, it gave me a false signal. This is exactly why that indicator is so valuable. It keeps you out of the trades that look good but aren't. Later in the day, we get this setup. Price breaks below the range low, closes completely outside, then comes back in. Clean breakout, clean re-entry. The indicator confirmed it this time. Long entry at the close of this candle, stop loss at the low of the breakdown. Take profit at 2 times risk. Everything lines up perfectly. Price pushes up and hits the target. Another 2-hour winner. This is the strategy working exactly as it should. And when you add that indicator filter on top of it, you avoid the setups that would have stopped you out. Stick around to the end because I'm going to show you exactly what that indicator is and how to use it with this system. This strategy works because it's built on one simple truth. When price breaks out of a range and fails, it snaps back hard. That move happens every single day across every market. All we're doing is identifying it and positioning ourselves ahead of it. 2 lines, 3 steps, that's the entire system. Now, here's where it really gets interesting. This strategy on its own is solid, but there is one indicator that takes it to a completely different level. It filters out all the losing trades, tightens the entries, and pushes that win rate even higher. I break down the exact indicator and how it's used to combine with this system in this video. Click this video on screen now because once you see how it works together, you'll never trade the same way again.